Welcome back. Well, as I mentioned, we have Pacific Financial Planners here, and Jerry's here to tell us all about what has happened in 2023. Hi, welcome.
Welcome. Well, I'll tell you what's going to happen next year in a minute, but let's review last year.
I think that's a good idea. We'll reflect on what has happened so far in 2022.
Yeah, it was a bad year all the way around for most investors, especially if they didn't come up with a plan to protect themselves, because we haven't had a down year like this in a little over a decade. 2008 was, people remember the financial crisis, the housing crisis was pretty bad. And this year was the worst start to the year that we've seen since that time. And really, it was the worst start to the year really in 60 years, because it started worse this year. The financial crisis was more in the fall. So, but we've improved a little bit in the second half of the year, and things have calmed down a little bit in terms of Fed raising interest rates. We'll see, maybe they start slowing that rate of increase. They're still going to increase rates, but a slower pace, and that could help markets as we head into 23. And if you recall, Lisa, I was in here mid-year, and I was talking about how bad the year was and how it was the worst start, et cetera, but I went back in history and I showed that there had been 7 other times since 1900 that this was the 7th time since 1900 that we started this bad, and 5 of the 6 previous, the market was up by the end of the year. And I said, you know, I kind of am optimistic that by the end of the year, we'll be higher than we were on March 30th. And sure enough, I've brought a chart in today to show people that it's not much, but we're up about 7% from the lows, and that gives me some hope for next year.
So let's take a look at the chart again, because there's a lot of things going on in that chart, and people are looking at it right now. So you can see that the first half, you said there is down, is that 22.5%?
Yes. Wow. That was the worst start literally since 1962.
And then what do you have up there? It says S&P 500 year to date down 16%.
So that's, you know, when you ask how the year went, the S&P 500 is the people talk about the Dow, but the Dow is 30 companies. The S&P 500 is 500 of the largest companies that trade on the U.S. markets. So that's more of a broader view of how things are really going. It's a lot more encompassing of different sectors. There's 11 different economic sectors. So it's the real picture of what's happened this year.
So if you're looking at any of them, the S&P would be the best one to look at.
Absolutely. And so if you're an investor at home wondering how you're doing, if you've done better than down 16.1%, you know, year to date, then at least your investor, your financial advisor, if you're doing it yourself, which is fine, has done better than average. But if you're worse than that, which a lot of people are, then that might mean you are taking on way too much risk. And even people that are down 16%, if you're a senior, you really shouldn't have this kind of return. You should have maybe half your money not in the stock market, as the very least, as a bogey.
Now let's look at the second half here, just as we head into the end of the year. It looks as though it's up 6%.
Yeah, 6.8, you know, almost 7, you know, I rounded up being optimistic. But the point is that you can see it, they're still volatile. We went way up about almost 17% from June till August. And then we had a lower low in early October than it was even in June. So for a little while, it looked like I might not be right, but you know, here we go, you know, into the year end, and it's rallying a little bit. But again, we're at an inflection point, and that's what I think is going to happen next year. There'll be several more inflection points as we go forward.
Now today, I believe the Feds will be talking about potentially the interest rate being raised again. Is that correct?
Yes, they're going to probably raise interest rates 0.5%. But we have raised interest rates 0.75% 4 times in a row. Okay, so that's a lot. And then there was a 0.5 point before that and a 1/4 point before that. This is the largest interest rate hikes we've seen since the early 1980s, when CDs were at 18 to 20% and mortgages were 16 to 18%. And so they're raising interest rates in an attempt to slow down inflation. And we're seeing that they are making some progress on that. But according to today's numbers, inflation's still over 7%. But that's using a different basket than we used in the 1980s. If it was the same basket, we'd probably be around 14–15% inflation.
Oh, wow. Okay. So now let's talk about what potentially could happen, you know, after an announcement today possibly, between now and the end of the year?
Well, traditionally, between now and the end of the year, there's this thing called the Santa Claus Rally. So let me put this on.
I love it.
And I'm hopeful.
Okay.
So we're hoping for the Santa Claus Rally. It usually starts right around now, December 14th, December 15th,
Okay.
and it really gets more in earnest the week actually after Christmas, between Christmas and New Year's. So, we've got 2 more weeks, 2.5 weeks, or well, I guess 10 days till Christmas, and then, but till the end of the year of trading.
Okay.
And generally markets go up. Why? Because it's a lot of psychology in there, and people tend to relax a little bit around the holidays. Not everybody, but a lot of people feel a little bit better, and that can make markets go up because people are a little bit less of a Scrooge and more generous and more inclined to have it go up. So I'm hopeful that it will.
So what would you be telling somebody right now if they were super concerned? I mean, obviously you're hopeful about it increasing, but do you have people still wait? Because I know that you're concerned and you don't want people to drop too much. And if it goes too high, there's a point where you might want to pull out or buy more.
Yeah, great, Lisa. That's an excellent question. It depends on where you are. If you're someone who is not sold all year long and you're still invested today, like you were in January, you should probably change things up. I mentioned inflection points. So this market has rallied, and it might rally for a couple more weeks here, but it might be a good time to lighten up on the stocks and look at high quality bonds, including treasury bonds and very high grade corporate bonds. And if you're in the highest of tax brackets, and I mean 35% type tax bracket, municipal bonds are also a very good place to look right now.
Right.
And I don't mean bond mutual funds, I mean individual bonds, and to lighten up.
Yeah.
So, but if you haven't, if you've been sitting around waiting and heavy in cash, it might not be the ideal time to jump fully into the stock market, but again, looking at individual securities and individual bonds makes sense right now.
Okay.
The best thing that people should do is not just hope and wait. It should be to get somebody, like myself or another professional, to review their portfolio based on their circumstances.
Okay. Now you have had several forums, financial forums over the course of the year, and I understand that things have been going so well that you now have to change clubhouses for next year.
Yeah, and again, a lot of it is, credit to having you help us promote those things. But we're going to go to the second Thursday of the month. It was always the last Tuesday. So it's going to start in, I think it's January 12th.
Okay.
And we're moving to Clubhouse 7.
All right.
Because we were in Clubhouse 5 and the demand was so much that the room's packed.
Great.
So, we think Clubhouse 7 has much more room to grow, and it'll allow people to spread out so they don't have to sit on top of each other. But it will start back up in January, and
Okay.
we're going to do it always the second Thursday of the month going forward.
Perfect. So that's January 12th in Clubhouse 7 from 3 to 5. And it would be important for them to call that number that's on the screen to let them know that they're coming, or it's not necessary?
No, just show up. It's a financial forum. I obviously lead the discussion, but it's a discussion amongst peers. You don't have to participate. You can come. You don't have to announce yourself. You don't have to sign in on anything.
Okay.
You don't have to sign up. Show up. Ask questions if you want. Listen if you want. But it's a good place for people to learn.
Exactly.
And to get their questions answered with no obligations and no risk.
Yep, and it's very informative, I understand. And hey, if you take one piece of information away, it was definitely worth it.
Yeah, people have loved it, and I'm glad. We've been around for probably about 5 years, and but we do need to get it to a bigger room, and so we're going to start next January in Clubhouse 7.
5 years and 35 years of experience in this, so fantastic.
Well, that's, yeah, thank you.
All right, well, thank you so much. Happy holidays to you.
Happy holidays to you, and thank you so much for the year.
All right, we'll see you next year. All right. If you want more information about what we have just discussed, you can always get in touch with Pacific Financial Planners, and their number is right there on the screen. We'll be right back.